In 2025, the S&P 500 and much of the MAG7 stocks will return less than 10% for 2025. In this video, I'm going to explain why the probability of that happening is so great and how you can invest to make better returns than the S&P and possibly better than 2024. Stay tuned. In 1996, my wife and I were living in Boulder, Colorado. My wife was working at a diner and I was working for a snowboard company. And one day I went to visit her and ran into one of her customers and somebody we jointly knew. And he was driving a brand new 355 Ferrari. And I asked him, "When did you get that?" And he explained he got it, about a month ago. And I said, "Well, how did you buy? What do you do?" And he said, "Well, we sold our house for $500,000 here in Boulder, and we took the $500,000 and we bought this internet stock. It was Yahoo, and he had bought it in May of 1996, a month after it had just gone public. Now, that $500,000 a year, basically at the end of the year, made him so wealthy that he had a brand new 355 Ferrari and a brand new home in Boulder, Colorado. Fast forward to today, and we see many people who have done the same thing by buying NVIDIA and a handful of other AI stocks. Between 1993 and 1999, the internet boom was gigantic. You saw just enormous amounts of money being spent on the internet and .com boom. People building infrastructure, doing transatlantic fiber optic cable across the Atlantic Ocean, the Pacific Ocean. We all became connected because of this thing called the internet. An enormous amount of money was spent between 93 and 1999. And then it stopped. And in 2000, the .com boom went bust. And those who owned a ton of Cisco or a ton of Oracle or a ton of Microsoft eventually lost a lot of money because there was no more people to buy more Cisco or more Oracle or more Microsoft. See, these companies were coming out and saying, hey, they're not coming and buying our product as much as they used to. They're not upgrading to new products like they used to. And quite honestly, how many more routers and switches do you need, and how much more advanced can they become in the environment and in the technology we have today? And from 2000 to 2012, the S&P 500, along with the NASDAQ, cratered, went through the housing boom, cratered again, and then until 2012 did the market start to heat back up and head north. As we got into 2000 with the pandemic and all of the mailbox checks, online trading took off, and this one thing called artificial intelligence started showing up in the headlines. In the last 3 years, we've seen billions, if not trillions of dollars being spent on AI, artificial intelligence. Unlike the .com boom, when you had thousands of companies actually participate, startups out of garages, a guy leaving his investment banking job and going to Seattle, Washington to start an online bookstore. Today we have AI and NVIDIA, Microsoft, Google, Amazon, and Tesla, and a handful of others. The difference between the .com boom and the AI boom is the .com boom was thousands of companies. The AI boom is basically 7 companies. The majority of the money being spent on AI in the last 24 months has all been with 7 companies. The magnitude of that. Half of NVIDIA's revenue comes from 5 different companies: Microsoft, Tesla, Google, Amazon, handful of Meta, handful of others. And these companies are starting to get smart and saying, listen, you're starting to charge us a lot of money. Well, today, I have the technology and the ability to go make my own chips. And so NVIDIA's 50% of their revenue is at jeopardy. The other side of this is these mega companies have spent billions upon billions of dollars building this out in a very short period of time versus the internet boom that ran from 1993 to 2000. So why would we see another 20+% return on the S&P 500 when everybody has spent all of their billions of dollars up to this point? A sign of this is NVIDIA coming out with 3 new product lines directed back to their origins of gaming, of robotics, and now I need a supercomputer of $3,000 to sit next to my other computer for which I don't use 90% of its capability, and now that's being introduced. Is that a sign that NVIDIA has run out of runway with Microsoft and Google, Amazon, Meta, and these other companies? I think so. If you look at the evaluations of these companies, the market cap of the U.S. market, stock market, is 200% of GDP in the United States. Historically, that is a overvalued calculation. That is enormous. There are other indicators that show that 56 P price to earnings ratio on NVIDIA at 56 times. That means you're paying for earnings 56 years down the road. Some of these other small AI companies are as well. 156% PE ratios? Really? I mean, come on. These stocks are overvalued. And now we are starting to see that as we roll into 2025. Does it mean that all of the stocks are not gonna go negative? We're gonna have a big crash? Yeah, we'll probably have a pullback, maybe 10, 20%. But by the year end, we'll have single digit returns of many of these mega MAG7 stocks. The S&P 500 will eke out maybe a 5 to 10% return. Here's the problem with this. You contribute to your 401k, and all of you probably just contribute to the S&P 500 index. Why? Because it's gone up 20+% 2 years in a row. All you hear about is AI. Did you know, though, the S&P 500, the price movement of that is of the top 7 stocks, market cap stocks in the S&P 500, they represent 40% of the market cap of the overall S&P 500 of 500 stocks? If NVIDIA sneezes, watch out. This is why 2025 and 2026, if not for the next 10 years, this will become a stock picker's market. The roof has been hit by these MAG7s. And I shoot a video on NVIDIA every day as I'm doing my walk, and I put it on TikTok, and I put it on X. And I talk about the price ranges that NVIDIA moves in. These are volatile companies that if you have a keen eye and patience and a process, you can make money as they shift from low end to high end on a daily basis. See, that's what investing will become for the next 12 to 60 months at least. If you're not a stock picker and not positioning, you're going to get taken out to the woodshed. And when I say woodshed, maybe you'll average 5, 6, 7, maybe 12% on the S&P 500 over the next 60 months. But inflation's running 17%. As they devalue our US dollar, you've got to be knocking the cover off the ball over the big green wall at over 15+% return year after year. If you're a passive investor, you're not going to do it in the next 24 to 36, 10 years. This is a stock picker's market. You'll see the rise of the hedge fund world again. They're doing average returns. You see some of the numbers that have come out here recently of the big mega hedge funds, 15, 20% or so. Yeah, hell, I could have just bought in the S&P. But they'll outperform in the next 10 years. The question is, will you? The Best of US Platinum channel is focused on technical and quantitative analysis. We have two offerings within Platinum. One, Mark produces a list of stocks every week on Sunday that he are setting up for moves higher. Now, these are not always short-term moves, but these are also long-term moves. A lot of the stocks that he selects produce an average of 4% return within a week. Well, if you start adding that together and you start looking at it from an annual basis, you're going to do 20+% returns. We also offer the price range projection worksheet. Every morning it updates and gives you the MAG7, the indexes, Bitcoin. We'll be adding more cryptocurrencies as well. And this gives you a daily range based on price and volatility and volume. It gives you this perfect picture of where a stock is moving and what range it's going to be trading in. Now, some of you will say, I'll just stick with buying the S&P 500. I'm 30 years old. I got another 30 years and 35 years till retirement. I'll just average it out and cross my fingers. But then there's guys like you and gals like you, like me, who are 55 and are coming into retirement pretty hot. And you want to do something different. But if you average in the next 5 to 10 years, 5, 10, 12% in the S&P 500, and your car insurance and your health insurance continues to go up, you're not going to retire. I used to be a financial advisor. I ran and built a $400 million plus assets under management company and worked with individuals who are in retirement stage or heading into retirement. What I do know is the biggest enemy you have is inflation and your health. If you don't take care of your health today, it will cost you big time. If you don't outrun and outpace inflation, you're not going to retire. Actually, you'll probably say at some point in retirement, do you want fries with that? But then again, AI is going to replace those guys anyways. So if you want something different, you want a change in your life and you want to take control of wealth creation, hit the link below, learn more about the Platinum channel. We have a 14-day free trial. But what I have said in the last 12, 15 minutes is true. These guys have run out of runway. They control 40% of the movement of the S&P 500 and 50% of the movement of the NASDAQ 100 every day. If they sneeze, much less look sort of droopy-eyed because they didn't get enough sleep in their earnings calls, chances are they're going down. And chances are they won't produce any bigger returns than they did, well, back when they started. Chances are, and I'm betting on it, that the S&P 500, the MAG7 stocks, will produce less than 10% returns unless you understand how to invest in them, when to buy them, when to sell them, and when to hold them. Join the Best of U.S. Investors Platinum channel. Try us out at the 14-day trial. Whatever you do, take action, take control, and always, always live the loudest life you can live.